Now we get to turn to Asia and what has happened so far. Obviously we've gotten some Chinese data. We've had what happened following the Alaska meeting, which was interesting. Let's put it that way. If there was a worst case scenario, that was the worst case scenario. And now the spin team has been fully engaged, trying to spin it as positive, especially in China. So it's just, it's going to be a matter of, duck and weave, what are we doing? How do we sift through this? But it's important to look at what has happened in the Asian Pacific theater in general. So when we look at industrial throughput and we look at what has happened overall, so let's take Japan for an example. So Japan data sets, so supermarket sales are still down, Tokyo department sales down, nationwide, all of them are net negative, where machine tool orders year over year are up. So you still have the local consumer doing less, but you're getting more machine orders. So industrial production, when we look at Taiwan, you actually it was expected at 7.7, came in at 2.96. So you're getting some adjustments lower, where it depends on where you are. And I still remain bullish Taiwan. You continue to see growth in general, and it's going to be an interesting backdrop as to where is growth. Because then when we look at Australia, so Australian growth on a PMI level still remains fairly healthy. They have their issues with China still. That's not going away. Biden has talked about going to visit, both Australia and Japan, show solidarity, and again, ways to mitigate some of the Chinese expansion. But when we look at Japan in general, so, manufacturing was at 52, Japan services were at 46.5, which again, we're not seeing real growth because the composite is at 48.3. So we're still not getting that real turnover and activity, because it's just the services, again, leading to people in Japan and South Korea and just Southeast Asia in general on the ASEAN side are just not doing as much, as they have not only just COVID issues, but also there's a jobs issue, there is a wage issue, there is a poverty problem, there's a food insecurity problem, which again is keeping people fairly locked into their, how do they minimize spending? How do they minimize some of these ways to conserve? And it's showing up in all different types of things, with CPI going up, PPI going up. We've had PPI in South Korea. It's now at 2%. The previous month it was at 0.8%. These are things that are going to weigh on just what does that activity look like in general, and where do we go from here? And that's why Taiwan is that bright spot. But again, it's going to be a matter of what comes next. And now just looking at South Korea, just to kind of pull it out for a second, exports, imports. Exports are down a little bit, 12.5%. Imports are still at 16.5%. So we're still going to get healthy movement in just stuff leaving the coast. And that's been a net positive for South Korea, but it's also indicative of why the U.S. is going to see inflation, because their PPI, as you can see, is going up. So if PPI is going up, then export prices are going up, and then that means that the importing country is going to have the increase in price, increase in fuel, increase in shipments and shipping, and then delays because it's going to take longer. All of these things are going to result in a higher price for the consumer, aka inflation. So when we look at India, and now shifting a bit, the problem with India, now this is a little sensational, but India is seeing that increase in just number of COVID cases, and that's the acceleration on that 7-day moving average. And this is where we're starting to see some of these things which we were talking about earlier as being something to be concerned about when we look at diesel consumption, gasoline consumption, and just what is going to happen in general. Now, as I've said before, we do not expect to see this spike again, like that massive spike. But based on the variants that are moving around in Pakistan, India, other areas within, they are the more virulent or viral, explosive strains, which is going to be a problem when you think about just how quickly it spreads, but it doesn't result in the same type of hospitalizations, which is a positive. So again, these are going to be those competing factors, which is why I don't think we're going to get a national lockdown at all, but it will be state by state, provincial level to try to mitigate and protect some of the underlying infrastructure. Now, while all of this is happening, the issue remains on refinancing debt, making sure that there's enough for just in general, when you look at fiscal stimulus, when you look at other types of monetary stimulus. This is why when we look at where India falls, there's still that percentage of, let's call it 45%, and then external vulnerabilities continue to creep higher as interest rates push up, as the cost goes up. I mean, obviously Turkey is in its own world of pain, and Russia doesn't have the same level, just looking at the extremes, because Russia still has a sovereign debt fund, a sovereign wealth fund. They have an ability to kind of backstop. I mean, Brent prices are at 64.27. There's still a benefit for them, just given the backdrops of energy in general. But then as you go into areas that are more driven by trade, that's when you start to see some of these additional problems like China, India, Nigeria, Indonesia. These are going to be those problems that we think are only going to get worse, not better, as yields continue to go up and as we continue to see the steepness of the yield curve. So then when we shift a bit and we look at the cost of borrowing in LC is up sharply. So the change in yield of generic 10-year local currency sovereign bonds since February 1st. Again, rate of change. So when we look at the change, Brazil up over 100 basis points, but the ones that we want to look at the most is India, and India is still only at about 20 basis points. So again, there's the pain that they're seeing is only with a smaller increase in pain, which just shows how fragile a lot of these emerging market issues are when we look at US. But then this is when we start looking at Russia. Russia has a little bit more of an issue in terms of where they've seen some of this growth. Now, when you start looking at Mexico, Peru, Brazil, that's when we start to see some of these issues and some of the pain. And then looking at it a little differently, while inflation increased only modestly. So we're seeing the shift up without seeing the same type of movement in inflation, which just means that there's going to be movement behind it, because inflation is only really getting started in some of these locations, which is why we've started to see an increase in rate hikes. I mean, obviously it's increased. As you can see, it's spiked up back above that 2015 level, but you're still seeing we're not at 2008 side. To give you an idea of kind of where this is going to go as a percent change on a year over year, we're still only getting to about 4%, 3.5%, 4%. It doesn't mean that we can't get to that top of the range of 6%, especially when we start looking at larger countries like India and other Southeast Asian nations, which have already started to see a push towards over 5%. So then when we look at, what is the taper tantrum difference? So this is why things are a little bit better in India versus 2012. So when we look at what has happened, so oil prices are obviously different. Gold prices are still not a huge impact. And income and non-commodity and services have gotten better. So when you look at the current accounts deficit, it's not to the same level. But then once you start layering in fiscal stimulus, reduction in tax receipts as we go forward, that's when you start to see some more pressure on the income side. So it's already shrunken, but it's just a matter of how does that compress further. And that's why things are a bit different. A 5% current account deficit in 2021 is impossible, even if oil goes to 70, 75. So that's why there's, this is the IIF looking at this. And it's an interesting way to kind of break down, because at some side you can say, well, things are really bearish. But then on the other side, you can say, well, they're not as bearish as they could be. And that's where there's that separation of, well, we have to look at this holistically. And while we remain subdued on India growth, it's not negligible. It's not like we're going to see negative growth out of India. It's going to be positive. It just will be a bit muted versus what I believe estimates are in the market right now. So then when we look at India's terms of trades are going to continue to come under pressure when you start weighing in Well, where is Brent pricing? Where is bunker fuel? And that's when you start to see some of those pressures come in when you look at PPI, CPI, and again, looking at the inflation side of getting goods into the market, as we've seen some of their trade slow down a bit, which is something that I think will reverse higher. But again, that's something that we're going to have to see over time. Now, when we look at the easy monetary policy, when we look at the 2-year, 10-year, and RBI repo rate, you can see that you've already started to see some of the short ends start to go up. So the nominal government bond yields versus the RBI repo rate, this is where we start to get a little concerned, where maybe they're just seeing they're going to have to do something to cool off the monetary side. Now, not yet. I just think it's a pause where they don't need to be as aggressive as Russia or Brazil, but they're not going to not do, they're just going to sit and wait. They're not going to cut further, but they have to say, or at least show that, look, we're going to let inflation cool. And then once we reassess, and if it comes back down to our target, then we'll talk about being a bit easier. But I think they want to let fiscal work its way through and get an idea of where some of this shakes out in general. Now turning to the China, US, Alaska side before we dive into it. So the meeting was an interesting statement. And when you went, so Yang went on a nearly 15-minute tirade on calling out the U.S. for racism at home and warmongering abroad. Now, just to be clear, both sides were supposed to have 2-minute introductory, hi, how are you? This is us. Welcome. Instead, both sides went wrong. This isn't like this. That was just the Chinese side. The U.S. went 13 minutes. So it's not like we aren't guilty on that, but. So the Yang's diatribe in retaliation between the two, violated an agreement between the two sides on the 2 minutes. Blinken then broke protocol himself and repeated what Biden had said to Xi in 2011, that it is never a good bet to bet against America. So clearly this was going very well. And then desperate to have the last word, Yang spoke again, calling the U.S. side condescending. So we broke protocol. The U.S. broke protocol, China reciprocated, we broke it again, they reciprocated, we broke it again, and they wanted the final word. And then things moved on. So now that the two sides have made clear their issues, what is happening abroad? But when you look at Beijing is characterizing the contentious clash as just critical commentary. But was a good beginning, and now they need to amplify positive factors. So the state media had this to say: Chinese and U.S. officials concluded a dialogue that both sides believed was timely and helpful and deepened mutual understanding. Clearly, they were witnessed something different. The dialogue was constructive, helped bolster mutual understanding, and yielded fresh consensus. I don't know if they were watching the same thing. So then they released a massive readout, and really, what did China do? They laid the blame at the U.S.'s feet, which again, isn't all that surprising. So then when we take that a step further, so we had the Alaska meeting, and before the Alaska meeting, we saw North Korea moving stuff around. So we're like, all right, well, they're preparing for a launch. Then we didn't get a launch. Well, we got a launch today or last night. So clearly they saber rattled before the Alaska meeting, let the Alaska meeting happen, and then fire something into the ocean. And then how does China respond? Well, Xi sent a personal message to North Korea. And what did he say? The traditional friendship between China and the DPRK is a valuable asset shared by two countries. China is willing to work with the DPRK and other relevant parties concerned to uphold the political settlement of the Korean Peninsula issue and maintain peace and stability on the peninsula. Kim said that it is the unswerving position of the North Korean people to strengthen and develop their relations. So again, these are some things to consider. So U.S. officials flew to both Japan and South Korea, again, trying to bolster U.S. positioning, U.S. alliances. So what did we do? We had North Korea saber rattle, Alaska meeting, U.S. goes to Japan and South Korea, and then we've also been talking to Australia about strengthening the quote-unquote Quad, which includes India. And then what happens? But North Korea launches something into the ocean. Again, kind of what we're used to seeing in general. So when we look at, okay, well, now that we've gotten the political side out of the way, well, let's look at what is China going to do? Because when we look at China's growth, which is above 6% in 2021, and we look at GDP year over year, agriculture, they're talking about 650 million tons, very doable. But services remains the struggle. We continue to see it on PMI. So how much can industry really marry or match up and provide that strengthening role given a rise in PPI, a shifting in supply chains, a movement away from China as you see prices increasing and some of this pressure? And that's where you put this in context and the slowdowns that we've seen in 19 and into 20. How are they going to achieve this given that they want to shrink their overall debt load while trying to grow as they have headwinds in their increasing party control? So let's think of this a little differently. So Semiconductor Manufacturing International Corporation are going to increase the amount of chips being made in Shenzhen. So an investment funded that's going to be backed by the government plans to invest $2.35 billion. And what will that mean? So SMIC Shenzhen, I'm terrible at pronunciation, I apologize, will focus on mature chip making technologies of 28 nanometer and above with the aim of producing 40,000 12-inch wafers per month. Production at the new factory is expected to begin in 2022. As you've been hearing me say for the last 5 months, technology, semiconductor, matter of concern, national security. So here is just another iteration of them trying to increase their sustainability on the semiconductor front, which the government continues to support. Now, the problem is the refinancing side. So we keep hearing about and talking about what are the issues that we see in China? And we showed a chart previously, and I believe I put it in again, looking at what are the bonds available, what are the local bonds look like. And here you can see just the amount of pressure for refinancing ratios across China. So you can just see over 100 percentage points, just where the percentage point pain is and how it's going to be managed, because they want to cut debt. They want to cut their overall debt load, but there's a lot at different locations, and each one has a different tax base. Each one has different growth profiles, and this is going to make things very difficult and a lopsided view, which is why the PBOC has a lot of wood to chop to figure out what makes the most sense and how do you try to secure this massive debt overload and leverage within the Chinese country. So Li He is all, talked about the economic security. So when you think about what that is, and then look about what are some of the changes that are happening, well, when you consider Liang is part of China's northeastern Rust Belt, once a major industrial base during the Mao era, and now it's continued to languish. So they're looking at that revitalization of the not only just the urban, but the suburban and the rural side, and trying to reinvigorate some of these areas, because this region is an important industrial and agricultural base in China, which is a great strategic significance in safeguarding national defense security, food security, ecological security, energy security, and industrial security. A lot of security. So that's why they're trying to find ways to solidify and to try to prop up, because they continue to, as they say, tackle poverty. So expect senior policymakers to be beating this drum loudly over the next few months, as we've been talking about with the 14th five-year plan, as they continue to talk about it and find ways to have it implemented in an area, and especially large parts that have already seen economic devastation and other types of just over leverage, where some of these provinces are taking 90% of tax revenue and putting it to interest expense. So there's a big problem in terms of how sustainable is it and how do you roll some of this debt. Now, we've been talking about it for a while now, but now we can talk about how is the CCP increasing its influence in the region, within China? So the party enters into businesses. So the share of private companies with a party cell is at 73%. So out of the 15.61 million private companies in China, 73% have a party cell in it to make sure that they're doing things, for the party. Now, if you remember me talking about it, this has increased. This number is from 2018. So we are now well into the 80% range, over 80% of a party cell within the corporation. And how are you going to operate worrying about what is the party hearing, seeing, taking, looking at, IP, conversations? This becomes a bigger concern when you start thinking about foreign entities and entrepreneurs as they've continued to ratchet up pressure against some key areas. So just thinking of that in general, the National Development and Reform Commission's 2021 work plan released during the 2 sessions of China began conducting national security reviews of foreign investments in certain areas. So national security reviews are conducive to the better development of foreign-funded enterprises in China and will not add unnecessary burden to normal foreign investors and enterprises. With a communist cell within it, their introduction will make China's business environment more sound and investment cooperation more standardized. So the problem is these reviews are going to be a huge problem for, well, do you need more party influence? Are you sharing appropriately? This is where we continue to see the pressure. And if you're a foreign entity, especially one in Australia, South Korea, Canada, Japan, or Taiwan that don't exactly have the best relations with China right now, or will you go elsewhere? And that's where so China needs more money, needs more foreign investment, but is going to make things difficult because they want to increase party influence. Again, this is that kind of friction that we continue to see. So then when we look at the party as getting older, this is why we've been talking about how China is trying to have the re-education side. They're trying to educate the young generations on the benefits of being in the party, of how the party has delivered so much, because they're trying to rectify these issues, because younger than 35 years is only 24.9%. They need to change that if they want to see this go through, because when we look at 2019, it's 24.2%. And 35 to 60 is 46.9. They need to get the younger generations involved, because there is a process to become part of the party. And if I have the link if you want it in terms of kind of what that process is, because a gentleman did a good job of breaking it down. And it's just fascinating when you think about that, the younger generations. And if you consider democracy, Hong Kong, Taiwan, how do you try to mitigate that? Well, it's re-education. This is what the party has done for you. And this is some of those concerns, which is why we keep talking about the re-education and these programs that have been rolled out. Now, the recruitment of new members in the CCP is slowing down after 2015. So this is the other issue. Not only are they getting less applicants, but they're still admitting less members. And that's why they're trying to get the applications up to get those new members back to those highs, because they continue to drift. And this is only in 2019, which is why it got worse in 2020, which is why these new programs started to get rolled out at the back half of 2020, as we've been talking about, and then aggressively gotten pushed in 2021. So the CCP continues to grow steadily, but when you look at just the growth side, an increase in members compared, when you look at just what is happening as a proportion of the population, there's still this overhang. And that's why you think about the CCP as this entity, but it's not the whole country. And that's why whenever I may speak negative about things, it's about the CCP and what they're doing, not the Chinese people, because there are a lot of individuals that don't like any of this and maybe are against it, but can't really say anything. So again, this is why they want to increase CCP membership. They want to try to indoctrinate more people to help, because their population has grown and they need more to help control that underlying. But it's getting more elitist. So it's a communist party for the people, but less workers and farmers are going in and more academia is going in. So this is something that they're looking to correct, which is why they've tried to increase the re-education on the rural front, because that's where the workers and farmers are. That they're trying to incentivize some of this additional adoption and growth. And that's when you look at that in general. So take that in its set and think of what is the good start, or what is the 14th five-year plan looking for? Promoting high quality development, ensuring progress on common prosperity, establishing a comprehensive national security concept. Again, with national security and common prosperity. Common prosperity is the most communist thing you could possibly think of. So Xi started talking about the need to make progress on achieving common prosperity recently. It's a driving shift in the party's approach to economic development. So we went from the Deng view of it's okay for some to get rich. Now it's how do we make everybody get rich, and how do we adjust poverty? And that's where we're starting to see some of this friction point coming in. We're still waiting. So we must pay more attention to major social policy issues. Again, policy issues, security, common prosperity. You were getting this. But when we look at what's coming, improving national pension and medical insurance systems, expanding affordable housing, keeps coming back into play, but it's all under that urban rural development of the National Development and Reform Commission played host to the meeting to talk about these priorities, but it was attended by officials and 6 ministers, and the focus was housing, urban rural development, taxation, and medical insurance. Again, these are things that they're trying to reduce the wealth gap, but they're going about it in the most communist way possible, which the question is going to be, is that going to create more friction within the country in general? And then when you think about the friction point, because it is a communist regime, that everything does roll back to the PBOC. So when you think of the special purpose bonds, the general bonds, there's only a decline of 2%, even though they're trying to shrink this quota, which is something that we keep talking about, and is the net problem for where is this going to go? Where is this taxation health going to be? And how do they help delever and try to take some of this debt out of the market? And the funding squeeze is continuing to become an issue as China developers' bond sales in recent months have trailed maturing debt. Monthly net onshore bond sales for listed developers minus debt due. So again, they're trying to take some of this debt out of the market, but it's happening more on the developer side, which is a positive, something that they're trying to do. And it's just not happening at the provincial bank side, which they're trying to accelerate and change in the near term. Which is why when we look at the household loans in China have exploded as they continue to push down some of this debt onto the consumer or the household side. And then total interest payments have continued to go up. So when you look at just what is that interest? Well, you have bank loans, off balance sheet. So interest payments are going up as trillions of CNY. So when you think about, we're at about 50% in interest payments. But then when you look at loan type and just the amount of loans out there, we're coming into 9 trillion. So when you think about the size of the economy, the amount of debt on these levels, this is why it's going to be difficult to see how much new debt can be pushed into the system, because we saw a huge run up in 2016. They stimulated the economy. They tried to push it through. They stimulated 2016, 2017, and then tried to cool it off in 2018. And then they accelerated in 2020, obvious reasons with COVID. But now they need to start trying to get back on track after you saw some of these movements, because those new short-term loans continue to spike up and new medium-term loans. So we're not seeing the progress that they're trying to generate, which is why when we look at Chinese PPI, it's going to continue to go up, which is going to pressure CPI abroad, PPI locally, and pressure those households that are already struggling under so much debt. So then when we look at Australian exports to coal, this is going to be a problem because China has to replace coal. Where are you going to replace it? Is it more expensive? And Australia is in no rush to support or do anything with China, given that they've been able to sell more into China and they have found rising support from South Korea, Japan, India, and obviously the US. So then when we look at that credit cycle, coming full circle, looking at the rising prices, the consumer, the underlying problem, China's credit cycle is starting to roll over with that credit impulse coming down. So does that mean that we're going to get a drawdown in the commodity index? We know that China likes to play games with commodities, trying to maximize, but is there going to be enough on the back end to kind of pull down some of these commodities, because everyone is looking at this rapid increase in commodity pricing in the second half? Well, this might mute it, and this is something to consider when we're looking at what is the activity going to be like in China, because we are seeing activity roll over. So this is something that we had an editorial, because there's some things that will come out over time. So when we look at things, the national security, including economic security, emerged as a major policy in December, as we've been talking about. Han argued that emphasis on security won't affect China's economic opening. We must adhere to the policy of opening to the outside world and coordinate between opening up and security. Well, you're cutting debt, you're increasing pressure on foreign entities, but you want people to come into your country. Again, it's going to be very interesting to see which one wins out, and if they start missing some of their GDP numbers, how quickly some of this will change to adjust that. Then when we look at grains, rice, and just the meals in general, so Vice Premier Hu Chunhua paid a visit to Xinjiang in the province to look at spring plantings. Keeping grain production stable should be top priority. 650 million tons this year is the goal. And this is the concept of what they continue to push. But promoting protection of nearby lakes for fresh water, and then adjusting the flood hit, which floods hit, as we've talked about with our Three Gorges Dam, floods hit over 5 million hectares of farmland across the Yangtze River Basin just before the rice harvest began. They need to adjust that, because that is why they're in such a shortfall right now. That is why there's continuing to be a problem, because those floods aren't going to stop. Unique weather isn't going to stop, or extreme weather given to the climate change that we continue to see, which obviously led its way there, which is why when we look at what has happened in the U.S., what has happened abroad, U.S. corn export inspection is the highest since 1983. And on a seasonal level, we're seeing a huge push as more corn, more grains, corn and beans, specifically going into China. Then when we look at just what has happened in general, well, wheat has now joined the party. So first we had corn, then we had soybeans. Now we have wheat inspections going up, which again is just pointing to the inherent shortfalls in that global market. So then when we look at wheat imports into China, they're starting off gangbusters well above highs. So they're importing not only wheat, corn, but also soybeans, lean hogs. Again, they're absorbing everything they can, which is going to leave shortfalls in other nations, and it's obviously driving up futures price. So when you look at the lean hogs coming back, soybeans, soy meal, all of this is driving up, and that's why we're seeing additional flows coming from Brazil into China, which are starting to show up. And you can see just the waves of beans departed after March 5th, departed after March 12th. The problem is Brazil is still behind on plantings. They're now reaching into a point where they're late in the plantings, and because they're late, yield is going to become an issue, because it's going to hit the dry season right when they're getting to core root construction. And again, this is going to become a bigger problem, because we didn't have a bumper crop last year. And right now it doesn't look like we're going to have another one, which is going to create this shortfall and support prices, because as we always like to talk about, there's a difference between the physical and paper market. The grains physical and paper market look way better than what we're looking at when we talk about oil. So then just kind of rounding that out, when you think about the EU and what has happened in general. So the EU, soon followed by the UK, US, and Canada, announced sanctions on Chinese officials and entities for human rights abuses in Xinjiang. This is the first time the EU has issued sanctions on China for human rights abuses since 1989. They just signed a trade deal at the end of last year, and everyone's looking around going, well, why did you do that when you know that and now they're starting to see this walk back? And it's going to be interesting to see how is this moved. So the China had a response of this move based on nothing but lies and disinformation severely undermines China-EU relations. The EU needs China. China needs the EU. The US needs China. China needs the US. So if you're China, how do you replace your largest consumer in the US? And I think it's net, it's the second largest consumer in the EU. This is where this political strife comes through and where things are talking. And now there's discussion on boycotting the 2020 Winter Olympics. There's going to be a lot of, again, trade war. We've talked about the trade war, the increase in issues, which is not going away. They're only going to get worse. So just to kind of round it out, we had a final focus. If you want to think about, speaking of human rights, China's People's Political Consultative Conference Chairman Wang Yang wrapped up a 6-city, 4-day inspection tour of Xinjiang. We all know what's happening there. Wang's remarks highlight an ongoing shift in Beijing's approach toward ethnic minority groups. The focus is now on assimilating these groups rather than granting them greater autonomy. Re-education, human rights, again, this is why we don't see this going away, because they keep doubling down on what is being sanctioned. These are things that are going to progress and get a bit worse. And again, we're going to continue to follow the story, continue to try to be ahead of what is coming, and we can see that there is a lot of issues, not only within the Chinese economy, but how it's going to impact the rest of the global economy, and why we remain a bit concerned on where global growth really goes. So if you have any questions, please let us know. We love the back and forth. And again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Thanks again.